This video is called Top Trading Psychologist Reveals Secrets to Scaling Your Account Fast.
Psychology to scaling your trading accounts. And I'm going to show you exactly the mindset you need to have and the understanding and mental model you need to have to go from $1,000 trading accounts to 10,000 to 100,000 to a million and beyond. And I'm going to give you some mental models and some diagrams and some understandings in this video, which are going to be incredibly beneficial on your scaling journey. Now, you've all seen me draw this diagram before, and this diagram helps demonstrate, and I'm drawing it away in the corner for a very particular reason, because we're going to develop on these principles. But this idea helps you differentiate between process-based thinking and outcome-based thinking. Outcome-based thinking is down below, and outcome-based thinking is emotional. And traders who are caught in outcome-based thinking are seeking after the pleasure of winning, and they're seeking after the benefit of winning that they perceive they're going to get in their mind. And they're caught in outcome-based ideas, and they take trades because they think this trade is going to be a win. And then guess what? Based on a sequence of trades, a sample space of trades, a large sample space of trades, 100 trades, some of those trades are going to be profitable, some are not. Let's say out of 100 trades, 60 of those trades are going to be winners, and 40 of those trades are going to be a loss. Or 30 of those trades are going to be a loss, and 10 of them are going to be break even. So if a trader is seeking after the positive outcome on each individual trade, then on some of those trades, on a percentage of those trades, they're going to be disappointed, because they're going to be seeking after the pleasure of winning. They're going to associate a lot of benefit and positive to winning. And by law of contrast, when that trade's inevitably a loss, they're going to feel pain and disappointment and challenge because of the law of contrast.
Dude, that was so me. That was so me. I told y'all before how whenever I would have a winning trade versus a losing trade, how it would change who I felt like as a person. It would change my entire psychology. It would change me, like how I looked at myself in the mirror, how I spoke to my family, things like that. It really made a difference. But then I started having these type of conversations with myself. There are no expectations of the outcome of this trade. Super funny that he happens to start with having a different mindset of focusing on the outcome. And this is why I specifically put this slide in here, is because when you put on a trade, there should be no expectation. I know that sounds crazy. I know that sounds crazy. What do you mean, Chris? How can there be no expectation? I expect to win. But do you? Ed Sakota, for those of you who have read Trend Following, he's one of the market wizards. He is famous for his trading psychology. He says everybody gets out of the market what they want from it. Some people want action. Some people want sympathy. And so they go out and make trades where they can then go and tell somebody else how awful things are and get the sympathy from that person. And then other people want to make money, and they don't care about the outcome of the trade. They just want to be profitable. So how does this relate? And the way that I interpret it is there's 5 types of outcomes of a trade. 4 of them are the only ones you should have. The 5th one you should never have. You should have big wins, small wins, break evens, and small losses. But the 5th one, big losses, that should never be on your radar. And when I say there's no expectations for the trade, it's I don't know where that's going to end up. When I look at these YouTubers who are saying, buy this stock here, it's going to 10x, right? Buy SoFi because it has to hit this profit target. Buy Palantir because it has to go to this point. Buy AMD because this is a generational low and it's only going to go up from here. Where are you getting that from? Where do you get this expectation from? In my opinion, you can't have an expectation of a trade. The only expectation you should have is one of your exit signals getting hit, one of your reasons to get out to happen, and then move. So I'm really excited that Pat started right there. I'm curious to see where he goes.
This is all outcome-based thinking. Now, there's a way to transcend outcome-based thinking and go to a higher level of thinking, which we call, or what I call, process-based thinking on this channel. And process-based thinking is a state of mind where, irrespective of the outcome, you've made the right decision because you've stuck to your trading plan. Process-based thinking isn't emotional, it's rational.
So man. Oh, this is so good. I'm so glad we found Pat's channel. And not only that, but process thinking, meaning there's good trades and bad trades, winning trades and losing trades. You can have a good trade that's a losing trade. You can have a bad trade that's a winning trade. But a good trade always follows your trading plan, regardless of winning or losing. I got that from Larry Hite.
This is rational thinking from the prefrontal cortex and the more executive parts of your brain, whereas outcome-based thinking is emotional, from the amygdala. And you can say, because
this is everyone else on YouTube, this is the outliers. This is literally every video we watch on YouTube except for Pat. And this is the outliers. Why are we the only people who think like this? I don't get it. I do not understand why it's so hard to have this mentality. I'm sorry, had to have the right mentality when everyone else is so emotional with their trading. It boggles my itty bitty baby brain cannot comprehend why so many people get over here. But I also think it took me many years of getting this beat into my head before I got it. And these people on the internet who claim to be so-called experts, why haven't they got to that point yet? I don't get it.
You're activating your amygdala, you're a bit of an animal when you're in outcome-based thinking. Whereas when you're in process-based thinking, you're a human. You're logical. Okay? Now, the way you transcend from outcome-based thinking to process-based thinking is by having a clear trading plan, mechanical trading plan, and using the bulletproof your mindset tool to identify all your expectations and ground those before you take the trade. That's the way you transcend. And then also working on your subconscious charges. That's a little bit more advanced, but it's another way to transcend from outcome-based to process-based. So bulletproof your mindset tool and six-figure trading plan, both of those in the description. Free tools that you can use and you can implement into your trading to help you make that transition.
I would highly encourage you guys to go download whatever he's got. I mean that.
From outcome-based to process-based. Now, that's one individual trade. Now, like I mentioned, there's a sequence of trades. And I was thinking, how can I draw diagrams better to communicate these principles better? And I'm going to share a few that you've never seen before. So let's imagine now that we've got a sequence of trades. And this trade's a win, this trade's a win, this trade's a loss, this trade's a loss, this trade's a loss, this trade's a win. Now, you can draw the polarities again. Now, if on this individual trade, you're seeking after the win, you've got expectations of the win, and that trade is a win, then you're going to be really happy, you're going to be elated, you're going to go into a state of pride. And in that state of pride, you're more likely to not stick to your trading plan, to minimize risk in the market, to take crappy setups. And on the next trade, you're going into that trade thinking it's a win, but lo and behold, because of your sample space, this trade's actually a loss. Now, this is assuming throughout this whole process, you're maintaining a rational mind. Most traders don't. Most traders take a win, they go way up into the state of pride, and they start taking shitty trades that aren't part of their plan. So I'm assuming as a trader, you have perfect execution with this analogy, with this example, but most traders don't.
And that's part of it too, is that you need to have that perfect execution. And the way you get perfect execution is to have your trading plan, right? Your trading plan needs to have every step of what you'll do in any instance. And even if you're running a YouTube video, right, it tells you exactly what to do during that YouTube video. Now, the reason you have this is to identify when something sets up, but also to identify when you don't need to do anything. Don't need to do anything.
So this is actually quite a generous diagram. And the next one, you're coming into that trade expecting a win because of your outcome-based expectations. But again, it's a loss, so you feel the pain of that. Because in your mind, you've anchored all this pleasure to the outcome to trade. The market didn't give you that. It's very disappointing as a result. Same thing again, pain of losing. And the next trade, you're seeking after a win and you get a win on that one. So you puff yourself up into a state of pride. You feel invincible. And now you're talking down to the market, okay? So this is an example when we draw it out over a larger sample space. There are more trades. Now, as a trader, you can transcend this whole dynamic of, let's put this yellow line in here, of whether the trade's a win or a loss and going on this emotional journey of winning and then losing and then winning and then feeling the vicissitudes, the ups and downs of being a trader. That's called an outcome-based thinking. Guess what this is called? That's called the boom and bust cycle. A trader who does well and does very, very poorly. Now, the way you transcend the boom and bust cycle is in each individual trade, using the bulletproof your mindset tool, using your mechanical trading plan, addressing the subconscious charges of infatuations and resentments like I teach in the 12-week program. So on each individual trade, you transcend from outcome to process-based thinking. Process-based, 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 process-based. And as a result, you aren't experiencing these ups and downs. You have more of a steady journey where you're less emotional as a trader and you're just more process-based, sticking to your trading plan. And in that state, you achieve consistent profitability. So
imagine how much better finance YouTube would be if more people thought like this, right? Instead of, hang on, let me do this. So let me pull up a new YouTube session. And so this is a dummy account that I used just for this type of content. Let's go to the subscription tab. And let's look at how many people are saying, buy the dip. All right, Crash, buy these now. Oh, this is funny. Remember last week how he was like, oh, the dip is over, remember? Oh, yeah, that didn't work out well. And it's so much of the same thing. Of course, all of our thumbnails right there. But it's buy the dip. You got to do it now. Don't miss out. There's a trap. All kinds of stuff coming through. And it's playing on that emotional brain. It's playing on that monkey brain, the animal brain that Inkari has put in there. And that's why they get monkey hammered, I guess you could say. But I don't know. It's just when you stop focusing on the outcome and just focus in on the process, maybe it's a lot less fun. But trading shouldn't be fun. Investing shouldn't be fun. It should absolutely 100% be about making money. But divorcing yourself from the outcome of that. Let's try and use an example, right? Imagine you're a shopkeeper and you sell motorcycle jacket. Let's say you're Mikey Mike and he sells motorcycle parts. Okay? Mikey Mike sells motorcycle parts. He's got a whole wall full of parts. And he's got some exhaust pipes, he's got some carburetors, he's got some cylinder heads, he's got some leather jackets, he's got some leather boots, right? He's got all kinds of cool stuff on the wall. And he notices that some of these sell really, really well. Like the leather jackets, he cannot keep them in stock because every time he gets a new shipment, they're just flying off the shelf. So he's like, well, I should continue to buy more leather jackets and maybe even expand my inventory, right? The trend is for more people buying leather jackets. But being a savvy business owner, he's like, well, if they're buying leather jackets, then that means they're probably out riding motorcycles. And if they're out riding motorcycles, then they definitely need new exhaust pipes. So he starts stacking in a bunch of new exhaust pipes. And for every one exhaust pipe set that gets sold, he sells 25 leather jackets. 25 leather jackets. And he's like, well, that means I should probably buy even more exhaust pipes. And so he's getting emotionally tied to the exhaust pipes. When the exhaust pipes aren't selling, they're just sitting there collecting dust, getting lost in the inventory. Now he's got a whole warehouse full of exhaust pipes. But the only thing that's really selling are the jackets. So he's getting emotionally tied to these exhaust pipes that are weighing him down, that are costing him money. Whereas if he had really focused in and said, oh, you know what? Maybe I should have expanded the number of jackets that I sell. Maybe I needed jackets in different colors. Maybe I needed jackets with different designs on them or something. Maybe I need them in different hides. Maybe I need an alligator skin jacket, an ostrich jacket, or a cowhide jacket, something cool, right? Changing up the jackets. And then he could have sold all those because that's where the trend was at. That was the process-based thinking. But he got emotionally tied because he loves pipes. He loves hearing the sound of those motorcycles roaring. And now he's got a whole inventory warehouse full of them. That's what we're talking about here, right? It's finding something that works and then exploiting that, but not getting emotionally tied to something that isn't working. And if he really wanted to make some sales, he would definitely have a monkey jacket. That's for sure.
So that's how I want you to think about it on each individual trade relative to a sample space. Okay. Now let's go a little bit deeper. Let's take this little individual trade, this idea of winning and losing, and let's elaborate on it in terms of funding. Now, like I mentioned in the previous video, there are different levels, there are different spheres of awareness or levels that you perceive yourself resonating on. And as I draw this out, I'm going to try and explain this. But the easiest way to see where you resonate and or to understand this topic is I used the example in the previous video in terms of a social hierarchy. Everybody has an understanding of where they fit in the social hierarchy. You may feel that you don't match up to certain individuals who you perceive are much better looking than you or much richer than you. Or when you're in the dating game, you may perceive an individual who's way out of your league. That's the language you use. So we all have an understanding of where we fit on the social hierarchy, and that's dependent on the observer and how much self-worth that individual has. But then there are also individuals that you perceive yourself higher than, and you wouldn't hang around with those individuals, but we all intuitively have a sense of where we fit in the social hierarchy. We all have an intuitive sense of how much value we, provide and have and give to other individuals. And there are literal spheres of mind or spheres of awareness that you can resonate on. And this is no different with money. This is no different with funding. You can resonate on a level where you think that you're only worthy of trading $1,000 or a $10,000 account or a $100,000 account or a 1,000K account, or in other words, $1 million account. So there are different levels of awareness. There are different stages that you can resonate at. Now, what does that actually mean? And how as a trader can we go from one level to the next? Well, just like there's positive and negative on these dynamics, on these ones above, it's no different with these ones here. So when you're at that level of trading $1,000 account, this is, in your mind, the blue is now your ceiling. So what you're doing is you're managing $1,000 account. You're looking.
Before he gets there, one trading thing that I've heard is one man's floor is another man's ceiling. And that's why I really like to speak in percentage terms, because it's like, I don't know what size account you have, but the principles remain the same no matter what. The principles are timeless and they are based solely on execution. And because of that, you could be in any one of these tiers and have percentage-wise approximately the same outcome. And I think that's really important. And that's why I want to say, one man's floor is another man's ceiling.
Looking up at the $10,000 account, and let's say, for example, you're risking 1% per trade. If you're risking 1% on a $1,000 account, what's that? That's $10. If you're risking 1% on $10,000 account, you're risking $100, right? So if you're at the $1,000 account mark and you're looking at that next level, your ceiling in your mind is $10,000. What that's saying is that you're infatuated with the gain of a $100 trade and you're fearing the loss of a $100 trade. So you're resonant at this level here, looking up at the polarity of trying to seek after and infatuated with that $100 trade and resentful to the loss of that $100. And that's how you know you're stuck at that level, when you're infatuated with the gain of that 100 and you're fearing the loss of that 100. If you weren't infatuated with the gain of that 100 and you weren't fearing the loss of that 100, you would resonate at a higher level above that. Okay? So, and
that's also why I say, when, let's say you've got some money coming in, maybe you've got some inheritance, whatever. Maybe you first started trading. Maybe 100,000 is what you want to trade with. I say, start with 10% per month. Get used to that size. And then add another 10%, and then another 10%. And yeah, it's going to take you, most of a year to layer into your full account size. But by then, you will have time to adapt to what those sizes feel like, right? For example, the person with that $1,000 account going to 10,000, that $100 loss is going to hurt a lot more than a $10 loss would. Now scale that up, right? A $1,000 loss is going to hurt a lot more than a $100 loss. So you need to get get used to that. Get used to that feeling of, this is what it feels like to win at this size. This is what it feels like to lose at this size. And then once you get accompanied, once you get, I cannot think of I know it starts with A. The word has left me right now. But once you get used to how that feels at that size, then you can start layering in and adding more and more. And then, like I say, one man's floor is another man's ceiling, but the principles are timeless. The principles apply in all of these. So if you follow your plan at 1,000, you're accustomed. Thank you, Dave. I was absolutely not there right now. Thank you. I need coffee. I haven't had coffee and I won't have it until Easter. Once you get accustomed to that size, then it doesn't hurt anymore. And it doesn't feel exciting anymore because you're just following your plan. And so many people think they have a plan. Everybody thinks they have a plan until they get punched in the mouth, right? But you think you have a plan until you get to this size. And then you win and you think you're invincible. So you throw your plan out the window and then you lose and you're like, that really hurt. That really hurt. Jonathan O says, how about losing 775K? Dude, I know exactly what you mean. But yeah, getting used to these sizes is really important. Yeah, it will be a slower journey initially, but you will make it up on the backside so much more because you will have grown into your account. Kind of like when you're growing up, right? You buy a new pair of shoes as you're getting bigger. I just bought my son, he's 12 years old, and he wears a size 10 shoe. And I wear a size 11, and I'm a grown ass man. And I'm like, how is my 12-year-old almost at the same size in shoe? So he's getting used to new shoes as he grows, right? But if he jumped straight from a size 6 into a size 11, it'd be flopping all over the place. It wouldn't fit right. Actually, I think that's a really good analogy. I think I'm going to use that. So it's like growing up into a different shoe size, growing up into a different account size, and seeing how that feels.
The way you know you're ready to trade 10K is when you're willing to accept the loss of that $100 per trade, truly. And you can resonate on that level. And you wouldn't be phased if you lost that $100, truly on a deep level. And you wouldn't be phased if you gained the $100. So then you know you can transcend to that next level. And also, what actually helps you do that is having a clear mechanical trading plan, using the Bulletproof Your Mindset tool, free tools in the description, and also addressing the subconscious mind, which is what I talk about in the 12-week program. And then when you're now resonating at this level, because now you've learnt the lessons and you're resonant on being able to lose $100 per trade, then now you're trading a $10,000 account. And then you're looking up the next ceiling. The next ceiling here is the $100,000 account. And when you're looking up at the 100,000, guess what? Life isn't easier. Life isn't better. Trading isn't easier or better. You have a new set of challenges because the new challenge is now the $1,000 challenge. So you can only be ready to trade $100,000 of capital if you're willing to take a $1,000 loss, because part of the sample space is you actually experiencing a $1,000 loss if you're risking 1%. So the way you know you're ready to trade $100,000 in capital is when you know you're willing to lose $1,000 at a single point in time and not be fazed by that, and also gain $1,000 and not be fazed by that. So you have to learn to transcend the polarities of gain and loss, and you have to be willing to accept the $1,000 loss, because if you're not willing to be a $100,000 trader. Think about that. Many traders have this fantasy in their mind that if I trade 100,000, I'm only going to make gains. But the reality is you're going to make gains and losses. So you're not truly ready to be a $100,000 trader unless you're truly willing to accept the $1,000 loss.
Yep, there you go. You have to grow into your account size. You really do.
Okay. And then when you go through the learning experiences of that, you mature as a trader, you use the Bulletproof Your Mindset tool, you work on your psychology, you level yourself up, you level up your income and your self-worth and your self-confidence, and now you're trading $100,000. Life isn't better. Life isn't easier. You have the new set of challenges. And the new set of challenge now is the $1 million challenge, which is actually the $10,000 challenge because you're risking 1%. So the new challenge you have is the 10K risk. So the way you know you're ready to be a $1 million trader is when you're willing to take $10,000 losses and be unfazed, and take $10,000 wins and be unfazed. So this is the psychology of scaling. And it's very important to recognize that if you want to be a $1 million trader, you have to be willing to take $10,000 losses. You can, and really the way you do that, the way you mature as a trader, to be willing to take those losses and to truly on a deep level understand that and accept that loss, is to work on your psychology, to work on your mindset, to work on your resilience. And I've talked a lot about resilience. Resilience comes from not having expectations in the outcome. So part of working on your mindset is using the Bulletproof Your Mindset tool, having a mechanical trading plan, addressing the infatuations and resentments logged in your subconscious mind, which what actually happens when you lose that 10,000 or you perceive to lose that 10,000 is it then triggers your subconscious mind and all these unaddressed associations of, oh, I'm not good enough, or it brings up a deeper loss, or it brings up deeper issues which you've left unaddressed. So a true 7-figure trader is one who's worked on their subconscious mind, who's worked on their psychology, and as a result is willing to accept those losses because they're unfazed by the outcome. They've truly embodied process-based thinking. Okay. So the way you mature as a trader and trade more and more and you scale up is by going from outcome-based thinking to process-based thinking, by implementing these simple tools and by working on your psychology and maturing as an individual. Okay. I wanted to put this video out there because I just want to communicate new ways to understand my teachings and what I share, because I know it will help. If you truly grasp this and you truly grasp the teachings of going from outcome-based to process-based, and you understand really that you have control over that by simple things that you do, and you understand your psychology on a deeper level, you understand your expectations and anchoring, and you understand these simple principles, and you understand the subconscious mind, you have awareness of what's actually getting triggered in the subconscious mind, and you know how to address that. I'm certain if you have that understanding, which is what I teach on this YouTube, which is what I teach in my free tools, which is what I teach in the 12-week program, then I know it will help you scale up and be successful.
For sure. Going from outcome-based to process-based. There are no expectations in the outcome. I just have a plan to get out when one of these things happens. Oh, somebody wrote that in the chat. I just have, thank you. I saw that. Now that you pointed that out, I saw it. Thank you. I just have a plan to get out when one of these things happens. But I don't know when that one thing will happen, right? I don't know if it's going to happen the next day. I have no idea if it's going to happen the next day. I don't know if it's going to be a week. It doesn't really matter to me. The only thing that matters is following my plan, just like you need to make sure you follow your plan. And my plan is not going to be your plan. You can follow along with my trades, that's fine. But you need to have your plan in place. Every single step figured out what you're going to do before you put on the trade. Now, real quick, let me introduce myself. My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards who teach this kind of stuff, exactly this. And they're the best traders of all time. I've been successfully trading since 2009, but not all those years were successful, I'll put it that way. And this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. And let's rank this video. Let's rank this video. You know, I'm probably going to give it a really high rating because I like Pat. I think what he has to say is so useful, so important, and yet so few people actually implement it. So few people legitimately understand that this is the way the market is played. And they want to go on YouTube and they want to scream, buy the dip. Hang on, let me undelete some of these. Buy the dip, buy the dip, buy the dip, buy the dip. The bear market's over. Buy the dip, buy the dip, buy the dip. No way. Nate says, 8, he learned some good stuff. Nate is always looking for what can he learn? What can he learn? Yeah, the time changed for sure. This is a real thing now. Golden Oldie says 8. Knight says 8. Philip says 8. Manny says 8. Sarah 8. Robert 8. Rob with the 8. Birthday boy, Salty Brad with the 8.2. Ashley, another girl. Oh my gosh, has an 8. Mark says a 10. Libra says just buy the dip. Yep, exactly. 8. Golden Oldie found this much more useful than the sensationalists buying the dip and the market's crashing. Yeah. Mikey Mike says 9. Justin says he's late. Dan says 9. Libra says, where's Jeremy? Yeah, Jeremy doesn't understand this. Jeremy is still stuck in, you remember at the very beginning, he talked about how this is outcome-based is emotional, whereas process-based is having a plan. Like this is us. This is everyone else on YouTube, and I just don't get it. I don't get it. And all these pumpers, they're all like, hey, I have a plan to sell when my thesis changes. Bro, when's your thesis going to change on AMD? When's that going to change? Or they'll say something like, "Oh, I'll wait until the fundamentals tell me something." Bro, the fundamentals, they come once a quarter. Once a quarter. Yeah, I'm not letting something go against me 89 out of 90 days during the quarter when I knew that I needed to get out. So yeah, huge score on this one. Let me grab a screen cap real quick. And while I'm grabbing that screen cap, you know what the next deal is. You know what's coming up next, and that's let's look at your stocks. So go ahead and start typing those in while I grab the screen cap here. Put it in over here. And I think 8 was the overall score, so let's do it. Impressive. An 8 is impressive. You know what else is impressive? You can save 64% on the Outlier annual pass and get it for just 82 cents a day over outlier.com. And if you're in the middle of your trial, shoot us an email and we can upgrade you, no problem. So let me ask you a question. What do you think? There's a poll over here. And if you haven't voted yet, go vote over on my YouTube channel on this poll. The most important rule in trading is to play great defense, not great offense. What do you think? The most important role in trading is to play a great defense or a great offense, right? Either one is playing it safe, is smart, or risk big to win big. I'm sure a lot of people think that this is how the market is played. I'm not going to influence your vote. But do vote for me real quick. We'll cover that in just a minute. The most important rule of trading is to play great defense, not great offense. What do you think? So Put your stocks in the chat and let's do this. Who was it? Who was it? It was Nike, right? NKE. Dot wants to look at Nike. By the way, I saw nobody put a 7. Or if you did put a 7, I missed it. Sorry. I had my bullhorn ready. I was ready for you. I was ready for you. All right, Nike got a buy signal. Let's zoom in. Buy signal came on February 19th, my 39th birthday. And let me move my fat head. And you can see over here, it started around G8 on the greed score. It's been moving up. It's up at G25 right now. Even though this is getting more greedy, even though your 10, 20, 50 are all cross bullish right here, the sector is still weak. I mean, here's the deal. 40% of the market, or 40% of a stock's move. Let's go to Nike. 40% of the move is due to the market itself. If the market's going down, that's going to be pulling down everything. 30% of the stock's move is due to the sector. And we can see here that the sector is getting much more fearful. So only the last 30% of the stock's price is due to the stock itself. So if Nike had a strong market and a strong sector, which it doesn't have either of those, this could be really pushing higher. But right now, looking at it right here, it's been in a sideways trend for a minute. A sideways trend is happening when the moving averages are crossing over. But overall, this currently has a bearish trend at the moment. I'm sorry, a bullish trend. You've got your 10. The outlier trend template is the 10 EMA over the 20 EMA with price over the 50 EMA. And all of that is true right now. And we got it coming up into earnings. So it might run up into earnings. But this would be doing so much better if the market were stronger. Knight wants to look at OPTX with news. What's going on with OPTX? Actually, here's something cool. I don't know if you guys know this, but OPTX. We don't cover OPTX? Let me make sure I did it right. OPTX. No, we don't. I was going to show you the news page right here. You can actually see what's going on with all the news on the different stocks, as well as the sentiment behind it, like neutral sentiment, and it shows which stocks it's tagged to as well. Negative sentiment right there. But OPTX, that's brutal, right? It's been going down for like months at this point. Since when did it peak? Probably December 27th. And it's been like trending downward for a long time. I don't know if this is ever going to come up, my dude, but I wouldn't trade it that way either, right? You got to think risk first. So this is a good trading psychology lesson in this one here. Now, I'm not saying that you're in this one, and I don't know your position or anything like that, but I'll tell you one thing. If I were looking at this, I wouldn't touch it. I wouldn't buy it with your money. That's how much I wouldn't take this one, because it's trending down. I don't know how far it's going to trend down. I mean, at this point, it's $1.17, so it doesn't have much more to trend down. But still, being risk first means knowing when you're going to get out if it's not working for you, and then making sure that you take that signal to get out when it comes. You take your signal to get out when it comes. Now, let's see how y'all voted on that poll. I want to see how you voted on that poll. Let's refresh the page. I will throw my vote into playing it safe is smart. But then again, I know a lot of people think you have to risk big to win big. Let's see what y'all voted. 87% say playing it safe is smart. And I agree. I agree wholeheartedly. But don't let me influence you. Of course, tell me in the chat if you think it should be something else. Very, very curious to see. And of course, be sure to come back tomorrow or later today for the live stream, where outliers like us will save time, make money, and start with less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you watch one of those, and I recommend you come to this afternoon's live stream. We'll talk soon.
10/20.